Remember the last Ponzi scheme of Bergdorf Madoff? Well, could you imagine another gigantic Ponzi scam has happened all over again? Yes, the FTX disaster collapse has happened. So, what is FTX? It is the abbreviation for Future Exchange. Now, FTX was the fourth largest crypto exchange firm. The company generated its income by letting customers trade their cryptocurrency and then charging a fee for each transaction. What is cryptocurrency? Cryptocurrency is a digital currency. It is an alternative payment method developed utilizing encryption methods. Is cryptocurrency real money? No. Instead of being actual physical money that we carry around in our pockets and exchange daily in the real world, cryptocurrency payments exist purely as digital entities to an online database describing specific transactions. So when you transfer these cryptocurrency funds, the transactions are recorded in a public ledger. So who were the crypto entrepreneurs? It all started in May of 2019 by a 30-year-old crypto entrepreneur and former billionaire named Sam Bankman-Fried. He was the founder and CEO of FTX. The FTX headquarters was in Nassau, Bahamas. Now, he was educated at MIT, and his only qualification was a former trade worker at Jane Street Capital, a quantitative trading firm. Now, his appearance always looked unkempt as he wore these short trousers and ill-fitting t-shirts, which emitted a genius vibe. Even his alleged propensity for napping on a beanbag at his office. Next, Caroline Ellison is a 29-year-old Stanford University graduate where she studied mathematics and is also a former trade worker at Jane Street Capital. Now, the two of them had an on and off relationship with each other. Alameda Research. Now, what is the connection with Alameda Research and FTX? Alameda Research, the sister company to FTX, it was a cryptocurrency trading company that was established in 2017 by Sam Bankman-Fried as a co-founder. So he appointed Caroline Ellison as the CEO, and he also hired some of his close friends. Alameda Research played a big part in FTX. Now, the development of FTX was significantly aided by Alameda Research as it played the role of its liquidity provider. So in 2019, the company moved its headquarters to Hong Kong to profit from the greater cost of bitcoins in Japan as opposed to America. Now, one of Alameda's early profitable transactions was purchasing bitcoins in America exchanges and then selling it in Japan, where it fetched a higher price than in the United States. The company earned between $10 million and $30 million around 2018, but was losing money due to incorrect price movement predictions. To start a crypto loan company in 2020, now the Citicorp Inc. was looking into agreements with Alameda. The bank's company head of digital assets claimed that he lost faith in the company after receiving evasive responses to his inquiries such as banking and general record keeping. He stated that his main problem of the company was a complete absence of a framework for risk management. The cryptocurrency crashed. Now, cryptocurrency prices fell early this year. Since its high rates last year, the price of bitcoins has fallen by almost 75%. And here is the fallout. In May and June of 2022, Alameda Research endured a slew of setbacks. The trading firm made large bets, some of which was profitable and many of which were unsuccessful. FTX had client assets worth about $16 billion. With these assets that clients had deposited on the exchange, FTX provided loans to Alameda of approximately $10 billion for trading purposes and provided money for their risky wages. Now, the Wall Street Journal had informed by unnamed individuals in November of 2022 that FTX had given Alameda, that's the sister company, access to more than half of its customers' funds. Caroline Ellison, the CEO of Alameda, claimed that she, Sam Bankman-Fried, and other senior FTX personnel were informed of that choice. The cryptocurrency exchange of Alameda, FTX, had a solvency difficulty in November of 2022, and both FTX and Alameda filed for Chapter 11 bankruptcy, along with more than 130 affiliate entities. So Alameda problems began. According to the Wall Street Journal, Alameda borrowed money from other financial institutions. They owed about $1.5 billion in debt to other counterparts not affiliated with FTX. So, according to Sam Bankman-Fried, it was impacted by customers withdrawing, totaling about $5 billion. And it could not fulfill the request of its customers. And from the beginning, Sam Bankman-Fried made significant political contributions and purchased luxury real estate with money from its customers. Binance is one of the largest cryptocurrency exchange companies. So in early November of 2022, a letter of intent between the billionaire founder of Binance and FTX was signed for Binance to buy FTX. But the very next day, according to the Wall Street Journal, Binance was pulling out of the FTX deal. Binance stated that it would not proceed with the acquisition due to FTX's improper management of customer assets and ongoing investigation into the company. Sam Bankman-Fried's net worth in October 2022, the CEO, Sam Bankman-Fried's estimated net worth was about $15.2 billion. Bloomberg, however, claimed that $14.6 billion of this was lost overnight. The Bloomberg Billionaire Index stated that after the crisis and the tentative acquisition agreement in early November of 2022, it fell to about $1 billion. Now, the world's wealthiest persons are included each day in the Bloomberg's Billionaire Index. So the Justice Department and Security and Exchange Commissions were looking into FTX after the problems of not being able to handle those large withdrawals payouts to their customers. The Bahamas Security Commission reported that it had frozen FTX assets. So Sam Bankman-Fried was indicted with 8 counts of fraud involving conspiracy to commit wire fraud, commodities fraud, and securities fraud by federal prosecutors in December. The reconstructing team and the new CEO of FTX claimed that nothing has ever been as horrible as FTX. It was also noted that the company's finances and bank accounts were not monitored. Also, to hide the theft of consumer fraud, their software was deployed. Now, making the customers whole, they don't know how much cash or current cryptocurrency they will ultimately locate at FTX, according to the court records. Whether customers will ever receive their money back is unknown. The new CEO pleaded for intolerance. And please, if you find this video to be informative, please give us a thumbs up and click the subscribe button to be notified weekly of more informative videos. And thank you for watching.